well versed when it comes to matters in relation to startups and in relation to idea generation, especially in Africa. He will be discussing more details in relation to startups and exactly what does it mean when it comes to starting these ideas and getting financing. Chris, welcome to the program, and it's a pleasure to have you on Business Cafe.
Thank you very much for having me. I'm delighted to be here to have conversations around startups and SMEs. And yeah, that report is very enlightening in the sense that Kenyans are raising money for supporting their startups. And I like those street conversations around what are the definition of a startup. And I know everybody has an opinion about what the definition is.
Yeah.
However, we are lucky that right now there is a startup bill that is in Parliament, and it is going to at least give the Kenyan ecosystem a framework of understanding what a startup is.
All right. So, Chris, I mean, startups have suddenly become more popular, especially in the last 5 years. And in Kenya, we have had quite a number of incubations in relation to fintech solutions. But when you're looking at startup as a whole, what exactly is it? And why are we having so much financing coming into the market?
So funding always follows a return on investment. People are always looking for, how do I get my money? If I give my money into a bank, into a fixed deposit, then I expect at least some 6% or so return. So when I'm putting my money in a startup, I'm actually looking at what is the return on investment that I'm getting. If you look at some of the companies that people have invested in abroad, so these are the big tech companies. You're looking at Apple, Microsoft, Uber. People invested several years ago, and today they're looking at more than 300, 400, up to even 1,000% return on their money. And so whenever people are looking at startups, they're looking at, if I put my money in this startup, is it going to give me a good return that is above market rate? And that's what is exciting about startups. Startups have the capacity to be able to multiply your money over and over into many thousands of percent of returns over the years. And largely because startups are able to generate value for their owners. So if you're, for example, if you look locally at some of the companies that are here that are giving their shareholders a huge return, we have examples like Safaricom, Equities, KCB. Those are companies that are giving their shareholders a huge return. And so if I'm an investor, I'm looking at the next big thing. I'm looking at which organization or which company is going to give me a return in the future. And so startups are going to definitely attract a lot of interest. And the other thing also is that the potential for them to solve solutions at a large scale. So you're looking at an organization or a startup that comes and says, you know what, we're going to solve an agribusiness challenge, or we are going to solve a finance challenge, or we are going to solve a banking challenge, and we're going to solve it at scale, which means that in a short period of time, we're going to be able to serve across the entire population, either across the country or across East Africa or across Africa. And basically the ability to scale is what also excites people, because this particular company can be able to launch a product, launch a service, and serve people from all corners of the continent or from all corners of the country. And those are the things that excite investors.
Yeah, and Chris, briefly, could you tell us the type of investors who are putting money into these specific ventures? Because I know there are venture capitalists, there are angel investors. Yeah. How exactly does it work? Briefly.
So when you have a startup and you sort of like put together your pitch deck, you put together your business plan, you have your minimum viable product, and maybe you even start getting traction in the form of customers who are signing up, then you can always approach an angel investor who will come and put in some money in your business. Or even at the point when you just have an idea, you can get some angel investors. And angel investors tend to be people who know you personally, people who trust you, people who know your product, or even within the angel investment network, people who actually can see the potential of the product and can take a risk at a very early stage. And angel investors tend to take a big portion of the company because they're taking the risk very, very early on. And the next level of investors then will be your pre-seed investors. These are investors who are coming after the angel investors, and they're saying the idea has some traction, the idea has been proven, people are already beginning to buy your products and services, you have some customers, and they take a position. Venture capitalists come towards the end when you're about to list in a stock exchange, or you're about to get and they call it Series A, Series B, Series C. So those are venture capitalists, and they're coming at a point when the value has already been proven and the idea is already taking root.
All right, Chris, there has been some debate and also a bit of disappointment in relation to why exactly are we having these investors. Why are they foreign, first, to begin with, one? And then number two, you find that even when they come in, they still have to appoint someone who is a foreign national to actually either head the company or even deal with operations in the company.
So number one, I think they're foreign because they have already practiced the aspect of investing in companies, listing in the stock exchange, and getting their money out. They already know how this whole system works. You go in early, you put in your money, and then you take it out in the stock exchange. If you look at Kenya today, we have very few companies that are listed in the stock exchange as compared to, say, America or South Africa or, say, even Europe. And so we are still in the process of getting into a place of understanding how the whole concept works. If you look at most of our investment, Kenyans love buying land, Kenyans love investing in farming as opposed to buying shares or putting their money in the stock exchange or in the money markets. We are also not familiar. We don't know how those things work. And so if a Kenyan startup comes to you and asks you to invest 1 million shillings or even invest 10 million shillings of your hard-earned money, people look at them twice and say, you know what, let me go and buy land and put up a house. And so the people who are willing to put in the money are foreigners. And when you're willing to put in the money, then you get to have a right to say where that money should go and who should be able to manage that money for you. And of course, people tend to trust those they know. So foreigners are going to come with their $1 million, $10 million, and they're going to invest in other foreigners who are in the market, who in a sense they sort of feel like they can trust. And so we can scream, make noise, and say, trust us, but we have to have our own money to be able to push that agenda.
And Chris, what makes a good pitch? What exactly should you include that can entice an investor to put money into your business?
A good pitch consists of, one, a credible value proposition in terms of, do people actually want the products and services that you are offering for sale? Or are you only selling to a few people? So you have to be targeting a market that is underserved or a market that is poorly served. And so if you're sort of like going into a market that is competitive and is saturated, that's not going to be a good pitch. If you're going to offer a value proposition to people who already are properly served, then nobody is going to be interested in your product. So you want to, one, have a value proposition that is going to go to a market that requires and needs the service. Then that market has to be huge. It has to be scalable. You know, if you have only 1,000 customers versus somebody else who has a potential 1 million customers, or somebody else who has a potential 20 million customers, you know. So if you think about it, the population of Kenya is 50 million. The population of Nigeria, I think, is 150 million plus. So if you're looking at the potential market, Kenya is a smaller market as compared to South Africa. And so if you're doing a startup in Kenya, you are going to raise a little less money than somebody doing a startup in Nigeria. And so the potential market size is also very important. If you're only going to serve Nairobi versus if you're going to serve the entire country, or if you're going to serve the entire East African continent. So those are the things that make your startup to be attractive and exciting.
When you're looking at the outlook for 2022, we've seen interest in 2021 around energy, agriculture, and the traditional fintech. But where do you see concentration going into 2022? Bear in mind that this will be an election year for Kenya.
So I think the interests are going to remain largely around the same areas. Technology-enabled startups that have the potential to scale and capture new markets and customers rapidly. Fintech is definitely still going to be a big thing. There are emerging areas of agriculture, climate resilience, and energy. Those are areas that are going to still remain interesting. We are going to also see some startups in the construction and real estate areas coming up, because these are areas that are areas of growth. But consumer-led business, retail-led businesses that are promising to support huge segments of the consumer market are definitely going to be winners.
All right, and even as we wind up, very quick, what gives a country such as Nigeria, which is in the $1.5 billion rank, and Kenya, what gives it a competitive edge compared to Kenya, even as we finish?
Size of the market, just the potential number of people who can be able to purchase or consume a product that is launched in the market. That gives it an edge. If you look at even the United States of America, they normally have an edge over European countries just because of the sheer size of numbers of people who can buy a product and a service. Yeah.
All right. Chris Odongo, CEO at Wild International. It was a pleasure having you on Business Cafe. Very good insights, very, very interesting factors in relation to startups. I'm sure our viewers are well informed. Someone else who's well informed but is well grasped when it matters to technology is, of course, my colleague Branji. He has at least 2 technology programs.
Yeah, the innovator in TechFile. But then, Brenda, the other thing I wanted us to also talk about is whether a startup should go to fundraising or do a go-to-market strategy more properly before they now get, to, do fundraising. But then that's a story for another day, Brenda.
Yeah,
good discussion there, quite enlightening. I am elated. Chris, thank you so much. And that's where we end it on Business Cafe. It's been a pleasure having you today. Tomorrow, what are you talking about, Brenda?
It's a surprise, but something in relation to mitumba?
Textile.
You know?
Yeah, Brenda, yeah, textile, yeah, Brenda. Thank you. We'll do this again tomorrow, same place, same time. Enjoy the rest of your viewing.
Have a lovely day. I'm Brenda Kerubo.